Hello guys, and glad to have you on board again. Today we're going to do a little update both on indices and still trying to somehow infuse a little bit of educational content through these things. This is definitely why we do these things. I'm not just sharing my scenarios just for you to copy or whatever. This is always just to share some knowledge, and this is used as an intraday real market perspective to just use the things I'm also sharing with you guys either in Discord or the educational series of videos and stuff like that, the trading lessons, all of this. So anyway, today's topic is all going to be about using the future forecast of indices, which is a fairly fucking complex topic right now. Definitely high level of risk managing at play. So let's try to decrypt what's going on using always the same rational things I'm trying to teach you. So using the supportive stuff and educational content you already know about to try helping you decrypting some very advanced professional stuff. Basically trying to teach you how to talk to speak my language, and then using this language to let you understand stuff that you probably wouldn't even figure out on your own. So that is what we're going to be doing today. And in terms of educational content, I'm going to teach you one very important stuff that is absolutely required if you want to navigate this type of areas the best possible way. Is going to be forgetting about truth or what's right, what's wrong, all right? What's going to be the right or wrong choices out there, okay? So this is a very classical beginner type of stuff. Definitely linked to the things we've talked about in the trading lessons recently, the fear of uncertainty biases. And you need to understand that this is an irrational bias. You need to understand that the stress you feel because of uncertainty, like we've explained in those videos, is just written and wired into your brain to just function this way. But it makes totally irrational decision when it comes to actually trading the market, because the market isn't supposed to be a deadly stressful situation type of thing, or a highly level of uncertainty chaos management type of thing, but mostly just embracing this fucking chaos and trying to do the best to navigate it. So just like we said, this bias is subconscious decision-making process that you're going to have to work around. And the problem is, as long as you're not really aware of that thing and the real process of fighting it, remember what we've said, you need to work around amygdala and response instead of just trying to fill the gaps with whatever you're going to come across, which is basically what most people do. When you're facing uncertainty biases, you generally try to fill the gaps, okay? And what you're going to be taking in order to fill this stress is generally either overconfidence, or you're going to try understanding what's going on. Like we said, we don't understand shit. It's just like we try to profit from structures, not to understand the market. So what happens generally when people try to understand the market, they generally face the easiest way to make it, either being right or wrong. So which means when the market is actually hesitating, which means being in range and therefore being highly uncertainty, in high level of uncertainty, that means this is where chaos is at its best, which means this is where the stress you feel is at its highest, which means this is where you get the stupidest reaction. And this is where people tend to believe that what matters is being right or wrong, which is, oh man, definitely not what needs to be done. In a range, you just look at your fucking wave counts and all the structures you know about. Is the range mature? Yes, no. Has the range made its third range boundary? Yes, no. How did we react from those waves? And how much wave do we have? Which means, is the range mature? Are we looking for accumulation trades, breakout trades, whatever? Just rationalize these stupid behaviors instead of saying, I don't know, I've seen some people being bullish, I've seen some people being bearish, I don't know who the fuck to trust. Well, whoa. Totally away from the actual rational thing. Just stand for a choice. If you don't know which one to take, just flip a coin. I mean, we don't even care about who's going to be right or wrong. It's just about how do you optimize your entries into a range. This one is neutral as hell. Okay, so those who say we got bullish trends on the higher time frame, so probabilities are more to the upside. Fuck that. I mean, we're totally irrational markets. We're ranging on the higher time frame, so there is no trend to support any rational probabilities for higher outcomes to the upside or to the downside. Take it as a fucking 50-50 game. You really want to throw a coin, then do it. And just stick to the plan. Say, all right, if I go face or whatever, I'm going to do this thing and not change. That's what matters out there. You being consistent in a range. Pick a fucking side and stick to it. And either you agree with mine or disagree with mine isn't the point. You're not there to either say, oh, Phil was right, oh, he was so good, or he's wrong, what an asshole. If you think it that way, you just got it totally wrong. What matters is just pick a side and optimize your entries, okay? That's what risk management is all about, specifically in a range. So some very experienced traders will be able to either buy or sell inside the range. But most importantly, for those of you who are learning trading, really generally just pick a fucking side and stick to it. Just make sure you enter in the appropriate timings, and then you secure your position and you will wait to either be proven right or wrong. Anyway, that being said, enough blah blah at the introduction. Let's get right into our context analysis, go some real-time market behaviors, and try to apply these perspectives I just gave you into some charts. All right. Okay, so context first, but in here, once again, we're going to go real fast, straight to the conclusion. What are the important matters out there? We just manage our way down to the 50 level or below 50 level. We're now getting at 46, so this is definitely not the end of the world. We just shifted into below 50, which is a sentiment, once again, but that also explained that sentiment is deteriorating. We can see that yesterday's session is just totally invalidating the one we've had previously. So one day ago, I was like, what the fuck's going on? How do we have such low volatility on a reaction, stuff like that? And yesterday basically fucked it all up, getting to close below previous day's opened. Bearish engulfing structure yesterday, very, very bad for the bulls. But once again, does that mean the bears won the battle? No shit, Sherlock. We're still in a range. So this range has a downside channel global structure, which means the bears have a little bit more strength than the bulls. So what happened yesterday just confirms that we're in a bearish trending range. But that's all about it. That doesn't mean we're going to go any way further than that. So don't be irrationally emotive right now. Just try to find some structures. And being right, wrong, just put it away. Anytime you're thinking that way, you know you're under fear and uncertainty biases, okay? This is actually a real clue to figure out that you're definitely not thinking straight. 30-year bonds haven't moved at all. I'm still waiting for information coming from this sector. So far, we've got nothing. In terms of correlated indices, DAX still at the bottom. EUROSTOXX doesn't respond. VIX is still in a possible upside trend. The problem is, so far, we still haven't broken the resistance. We're just getting closer to it, but still haven't broken anyway. So there is really two key areas on the VIX. Either we're going to go below 30 and we're going to try filling the gaps that we've opened into this new monthly expiration, or things will start rolling out of control, breaking down on indices, creating some further downside attraction, and VIX is very likely going to break the resistance. So who knows? It's just so far we're still in the range, hesitating. So god damn it, no one's right, no one's wrong. Trending will be the decider. And the trend will either be invalidating the bearish trend and we'll go to the upside and build a massive support, or in the opposite direction, the support will fail, will rapidly fall below, and end of the story. Someone's going to be right, someone's going to be wrong. But who gives a shit? It's not about that. Let's go straight to the charts. All right, oh, sorry. Okay, so today we're going to talk and make a quick introduction about the Nikkei, because like I said, among the educational purposes I'm trying to spend out there, to share out there, recently I've been talking to you about this spread chart, because even though I try to make it as rational as possible for you guys to understand what was at play, what was the smart money probably doing, because I don't know for sure, but I know how they think. I know the thinking process, though I told you, have a look at this thing, because this is probably what they're doing. Today, I think that we've reached out to some areas in which the Nasdaq to Dow Jones probability have retraced down to supports, and they won't change until we actually get a breakout or breakdown, a breakup or breakdown. So I think right now, this is not where we can gather some informations to orientate probabilities one way or another, okay? I think the game is going elsewhere. And in order to figure out how we get out there, I'm generally looking at correlations that don't behave the way they should, which is generally meaning that someone or some traders, and generally smart money, is impacting those correlations, meaning they're acting upon them. And what I totally figured out of nowhere recently is that, yeah, Eurodollar isn't going on some support. I don't think this is where the game actually happened. I somehow was expecting Eurodollar to slip below 1.17. This is where support actually takes actions. But we'll see. So far, it's a speculative area, early signals and stuff like that. But the USD/JPY has had quite such a rebound after a breakout structure. And normally we don't do that, which means we had everything we needed for a breakdown, and it actually ended up not breaking down. because retracing to the breakout level can happen, of course, but not that way. So I've seen strong reactions to the upside on USD/JPY when in the same time indices were falling off a cliff. And I was like, man, what the fuck's going on? And I actually should have been thinking about it way earlier than that. But first thing first, Japanese currency is moving to the upside, to the downside. Well, eventually let's have a look at how the Nikkei reacts. And first things first, Nikkei hasn't moved at all. Is the Nikkei going bearish? Has the Nikkei broken some support recently? Not at all. And it's still actually hanging on some top areas of its range. So let's talk about the global structure first, because we don't analyze this asset generally, and we're going to take a few minutes in here to do it. Just first of all, much broader time frame scales to figure out what are the global stuff, right? We contextualize our asset, and then we zoom in to the time frames and context that we care about for trying to find probabilities of answering our question on what the fuck's going with the Nikkei that doesn't react like others do. So first things first, the global structure, definitely bullish. I mean, bullish context, bullish trend channel. If you think that's bearish, just goddammit, think about it twice. But that's not about it, okay? So global bullish context in here, generally, not enough history to actually figure out all the breakout structures and things like that. All we can say is that the latest pattern detected as was a bearish pattern, validated by an oversold cluster slightly later on, overbought cluster. And since then, what we've done is basically two sets of waves, okay? There is a definitely clear and clean third range boundary going on in here. Okay, late detection from the algorithm once again in here, the pattern, retracing down to support, failing to make new highs, and breaking the context or the trend channel in here means that the pattern is going on in here. It's just delayed indication. It has gone too fast, okay? So here's our third range boundary, which means here's a fourth range boundary, which means, oh shit, we've got a mature range on a bullish upside trend. So what the hell's going on? We could have a bullish breakout going on the Nikkei on the monthly chart anytime soon. Anytime soon monthly chart doesn't mean it's going to happen right now. It just means overall structure, eventually a few months from now, are very likely going to go to the upside. It's just that right now we're dealing with the resistance. We're dealing with the trend line. So accumulations to the upside might be taking place on the Nikkei. Let's try figuring this one out by zooming into lower time frames. Okay, so here's our beautiful trend line. Okay. Here's the area in which we might be looking for accumulation. Great, we're dealing with some resistant context. So if we buy the trend channel and oscillate from context to trend channel, that means we're accumulating. So why is the Nikkei not releasing energy? Well, probably because of that. So if we go for bullish accumulation, then this is exactly what we want to see. But in the same time, do we need to accumulate right below the resistance, or do we have all that room? Because remember that accumulation is just a market that goes from trend channel to context. But that doesn't mean paying a rising trend channel. That just means anytime we retrace, we're not reaching the context. So it's actually anything that retraces but doesn't go down this road is an accumulation. So that gives us a plenty fucking type of room in this area. So does that mean we have to buy the trend channel? I think not necessarily. More importantly, just have a look at that squeezing pattern. What it says is that you're going to have volatility out there, and that the volatility can be pretty stupid, which means the early reaction cannot necessarily be the right one. In some other words, if the market is breaking down, that doesn't mean we trend to the downside, though we probably are dealing with ranging structure nearby. Leading me to believe that this is where the actual game is at play right now, trying to figure out where the Nikkei is going to break, either up or down. Is it going to break to the downside, coming along all its fellow assets that have been falling off the cliff recently? Not going end of the world territory, just, 5-10% drawdowns, and then we catch up on the dips, okay? So if these things were on the verge to happen, then the Nikkei hasn't done any of it yet. So either the best is still to come for the yen, for the Nikkei, which will probably fuck up the yen and prop it all up to the upside, which could be seriously helping me on the USD/JPY, or I am wrong on the USD/JPY, and this is the asset that is going to save everyone else's ass, in which we're just going to try breaking right now, and at least early breaking the resistance before probably just ranging a bit, pull backing, and eventually buying later on. So I don't know what the answer is going to be. All I know is that a squeezing pattern generally says a range is probably maturing on the lower time frames. So if you really want to orientate probabilities, get to this lower time frame and try to find a mature range structure. So in here, no spoiler because I just done it for the French guys, so I know what I'm talking about. All right, this thing is where we get the mature range. 4 range boundary, first, second, third, fourth, okay, and we actually get a fifth still at play. So right now we're questioning whether the accumulation will build itself to the upside. In that perspective, we will react upon the trend channel and not reaching out for the context. So anywhere that anytime the prices rebounds out there would be a probable bullish accumulation. Okay, remember that in order to break out of a ranging structure, you need to break a trend line and the third range boundary level, which means this is where the bullish breakout could occur. So if the Nikkei were reaching out 23,500 would be a serious concern for the bears. So that would say an asset is breaking some significant level of resistance when others are eventually looking for supports. That could be a global sign that equities might be dipping into the current areas. So bear this one in mind, okay? Option number 2, this is just bullshit. The Nikkei will seriously lose its ground, USD/JPY will start deteriorating, and we'll get to accumulate into this area, being ready to break this channel to the downside and start a trend. Okay, so I don't know which one is actually going to be the right one. All I know is that we're 5th range boundary so far. I would say that odds are still slightly favoring the bulls right now, because regarding the structures we have, the last time we've reached out to a context was the resistant one. So for now, odds are favoring the bulls, as long as they prevent prices from going down the support context. Okay, so yeah, you do as you please, because what I have into this H1 time frame has actually quite some opposite sensory signals coming from the H4 time frame, in which I would say, oh man, if you really wanted to break, you would have done it. So this really looks like a totally failing type of pattern more than anything else. If you've noticed that thing, all right, here is a possible third range, here's a new historical high, here's the third range boundary, okay, reversing context, stuff like that. So we do have a third range boundary in here, okay, and we do have another third range boundary in here. Oh, not great. 2 third range boundary align with a slightly upside top in between. Man, that's a bearish pattern. Fuck that. So we do have either bullish signals or bearish signals. Let's say that the 4-hour has a negative pattern, pretty negative pattern. We already tried a break, and just like the Nasdaq failed to do it earlier this week, this is exactly what happened with the Nikkei, but that doesn't mean the Nikkei won't try again. We do have a rising moving average that we're falling before, and we look at how we just crossed it the last time. We broke this trend line and trended out of it. So if we just did the exact same opposite reaction, all right, early positive reaction on the moving average to actually just go right back there and fuck it all up, then I would say that's just a very probable pattern. So the problem is, the more I look at the Nikkei, the more contradictory signals I see, which is totally signaling the squeezing pattern on the daily chart. So it's really a 50-50 game. Though don't try to say, I want to be right or I want to be wrong, but actually try to put yourself into a more rational perspective and try to figure out that this is not what matters. Anyway, today I could be making a quick assessment on the S&P 500. We're eventually going to be doing it. Okay, real quick vision on what happened yesterday. There is one pattern into the S&P 500 which, as long as it validates, or as long as it plays out this way, is quite dangerous actually. That doesn't mean this is the end of the world. There are plenty of patterns going on right here, but right now the one I see is this one, which is not great. That's 2 sets of waves going to the downside. It fairly much look trendy, but it failed. As you can see in here, we failed the breakout, so not great. But anyway, we've retraced to the overlapping level and here we sold. Yesterday was my entry price right on here. Speculative entry. Look at the reaction. That doesn't look good at all. We've already made new lows, totally suggesting that, oh man, I don't know what the fuck is going on, but that's not great for the bulls because that could be the signal for an extended wave 5 structure leading to the further down the road breakdown of this structure. So this is a very bearish pattern, but has to be triggered. Remember that this pattern exists only when we actually break out of the range, which we still haven't. So if this is just one another trap, and if we manage our way back to the yesterday's entry point, then totally is going to be a wrong footing structure. But until then, as long as this is on, I think probabilities are slightly more to the downside. Okay, so we'll see all about it. That means we need to break down and to succeed this time, or at least later on, okay, as long as we do not get back there. All right? So that's pretty much all about it. Until then, I would say slightly more bearish pressures on the SPX, but until the breakout occurs, don't sell aggressively over a supportive area. We're dipping a toe below the 23%, which is this line, if my memory is right. So as you can see, the first support has had quite a weak response, looking at how violent the reaction has been, but we're still dealing with a supportive area. So don't be dumb. Okay, don't sell supports. The only way you can sell a support is with a breakout pattern. I think this one is getting closer eventually, but until it actually occurs, don't be dumb. If you sell supports, you don't get it. We sell resistances if you have a bearish bias, and if you have a bullish bias, you're definitely granted to buy those supports. Find the signals and stuff like that. Don't give a shit about bears trying to convince you that you should sell. If you are a bear, don't try to listen to bulls who are convincing you that you should buy supports. Just don't give a fuck. When you reach out to your opponent's area, just risk manage and do your fucking job. All right? Follow up on your convictions. What matters is not your decision. What matters is how you optimize those decisions. That being said, appropriate time to reach out. Conclusion. All right, so even though today we don't have many news coming from the market, I tried to send you two messages. The first one, stop bullshitting your heads with whatever that is, who's going to be right, who's going to be wrong. Stop listening to people. In ranges, actually, that doesn't matter. And the more you listen to people to try figuring out what's at play, let's understand that this is a very stupid pattern. I can totally unpack that pattern so you guys understand what's really at play. Let's do it, okay? Fear and uncertainty biases, which means you're in a range, you don't understand what the fuck is going on, and you try to make sense out of what happens to fill the gaps. It feels uncomfortable not knowing because fear of fucking uncertainty, but like I said, this is an irrational bias. You're never going to understand. You're never going to know. So just embrace uncertainty and live with it. Work yourself around that slowly but steadily, working out your amygdala response through cortical response or stuff like that. You know about it. I'm not going to go down this road, but try not to make mistakes. Try not to fall down the traps, okay? These are irrational emotions. Uncertainty is not something you try to fill the gaps. It's just something you work around, okay? So work around that. Just don't fall into it. And this thing of, oh man, I don't know, I should listen to someone else, looking at traders or whoever else is just basically going to try influencing. But we don't do that on purpose. Just like I said, I'm sharing my knowledge. I'm sharing my plans as well. Following those plans is not what I invite you to do. I'm just sharing the knowledge and the process. So you can use the process one way or another. If you're actually using my patterns to buy right now, there are plenty of opportunities. It's just that I decided one way doesn't mean you have to. So I'm not trying to influence you into my decision-making process, into my personal decisions on going up or going down, favoring one way rather than the other. I'm just trying to teach you how to optimize your entries. So use what's valuable into my podcast rather than just, oh, he's buying or he's selling, so maybe I don't trust him, though I should do the opposite, whatever. All of this thing is just bullshit, fear of uncertainty being totally controlling your process. Just fuck it all up. That doesn't matter, okay? Anytime you think about right or wrong, about which side should I pick, just pick one. If you don't know which side to take, probably means the odds are closer to 50-50. What's going to change the actual matter and outcome in terms of money is how you optimize your entry. You want to sell, look for selling context. Do your fucking job and find the timings in which the bears will likely do the same things you do. If you're a bull, don't give a shit about the bear's entry. When the bears are talking that they're entering, whatever, just look at your charts. If you see an actual bearish opportunity, means you need to risk manage. All right, normally when this is bull's times, when you're a bear, you have one choice. Either you do nothing because you think it's pointless, or you decide to partial profit take and you risk limit your trades. Same thing goes on the opposite direction. It's really that simple. So that was the first message today. Think it that way, because any other way is just probably falling on the uncertainty bias's stupid response. Second message is for most experienced traders out there, those who are trying to orientate probabilities, okay? I think right now looking at the Nasdaq to Dow Jones trade doesn't really feel appropriate anymore. We're right onto supportive areas. We've reacted down to resistance, and we might be oscillating and waiting for the actual trend breakouts to show up. So I don't think we're going to get any more information coming from Nasdaq to Dow Jones spread charts until the breakout occurs, which means if we want to orientate probabilities, I think the game is now going somewhere else. And just like I try to teach you, if you want to figure out whether smart money is actually at play, look for odd reactions where things doesn't behave the way they should. USD/JPY definitely felt odd to me, and I shared this thing in the Discord for a few days. So I should have instantly looked at the Nikkei. I failed on this, but now that I've looked at it, I definitely know this is where the game is at play. So now smart money is looking and speculating on the Nikkei, and the outcome we're going to get out of this squeezing pattern is probably going to be the early signal we look for. Okay, so we still bear in mind what we've said, what we've talked about. We still look at the VIX because things could eventually roll out of control from this area, but so far it's still under control. Same thing goes for the 30-year bonds. Still actually no reliable signals out there, still compressing stuff. But I think the one that gives us the most clean ranging structure to break out of is the Nikkei. So look for this one. Bullish breakout, bearish breakout. Don't forget that a squeezing pattern can give false early signal. We can try breaking to the upside, failing, and then reverse. In order to know where to fail, you need to know where the breakout pattern put its little target. Remember the cross signal. If the market rides up to the cross signal and reverses back to the original breakout point, that means that was a false breakout, and we're likely going to break to the opposite direction slightly later on, okay? So don't stupidly blind follow the first breakout. Just make sure the trend puts it play later on. Crossing beyond the target is a sign that people are following the breakout. If that's what happened, you're probably going to get the early reactions on the Nikkei, and others will likely follow for the reasons I just shared about. This is really experienced stuff in here, but this is how you can rationally orientate the odds into a range, okay? So despite that, what that means, truly actively speaking for all of you guys, is that you must have picked a side right now. It's too late to be on bearish, bullish one day, another. Just be one way, okay? Make it simple. Pick a side, stick to it, optimize your entry, and right or wrong is the final answer. It's the only outcome. You're going to be right or you're going to be wrong. Who fucking knows? And actually, let me tell you, who fucking cares? Only dumb money cares about being right or wrong. Smart money is just like, all right, I'm just going to take a little loss eventually if I'm wrong. The best case scenario is taking no loss, the one I'm currently into, which is very comfortable. I mean, if I'm wrong, I'm going to make no loss. If I'm right, I'm going to make money. So that's definitely meaning that I've done my job. And this is how, and this is what you should head to. Okay, stop bullshitting your head, stop falling into the uncertainty biases, just try acting as a smart trader. These things are a long process. Remember that working around your biases takes a few months because you need to work around a limbic system, which is a subconscious level, which means you cannot actively change stuff out there. You can just learn some processes that will help changing these areas and how they react over time. Okay, so don't blame yourself to making some stupid reactions today. It's absolutely normal. But the more you work around these processes of trying to fill the gaps, the longer it is for you to work around them. So think the one way. If you have bad reactions, which are once again instinctive reactions because they're subconscious, just try not feeling and falling into the traps. Just try avoiding them and making the things rational and saying, oh man, I was caring about right or wrong. Oh, he's a damn smart motherfucker. I should be listening to this thing. Okay, so I'm going to stop focusing on right or wrong. I'm going to try working around my uncertainty biases slowly but steadily. That's the process. That's the mindset you should be into. Avoiding the traps and knowing that anyway, making it automatically will take a shit ton of time. So Falling into the traps is going to be your recurring system as you go on. Just make sure that when you fall into a trap, that doesn't trigger actions. That's what matters out there. You figuring out that some subconscious level processes are at play. They will try to control you, just make sure they don't trigger actions. Okay, and then you uncover the pattern, you'll make it rational a little once in a while. Like I said, cortical functions will slowly but steadily take over the amygdala response. It's a long process, but you'll get there. See you later, guys.